G'day traders, Stacey Burke from Stacey Burke Trading. Today a short video on the pump and dump. A lot of questions from traders. This week has been an incredible week. We had trend trades, reversal trades, but pump and dumps, and really good ranges for traders to not only just be capturing some short-term profits, but be positioning themselves and holding for larger moves. Some fantastic textbook trades this week. So congratulations to all the traders who had a very successful week. One trader actually messaged saying he had his first six-figure week. Massive congratulations. Absolutely fantastic. And as I told a few traders, once you see this, you cannot unsee it. And the pump and dumps occur over larger patterns, but often the beginnings of every session will have an opportunity for a pump and dump. And that's when the markets come to life, the market money, the market makers, the smart money, the institutions, the algos, whatever people want to call them. But there's often the manipulation, the fast move to the higher to the low, and then the gradual fade or reversal that just allows short-term capturing of profits, but also positioning yourself into a larger potential move. So obviously the pump and dump can be a dump and pump, depending if they're going long or short. Time of day is key. And as I reiterated to many people this week, it's the time of day more than anything else. People get caught watching the price and chasing candles and, oh, how did you get that? Or, but it's about the time of day. The time of day. It can be a trend trade, so we can get a pump. As we saw in gold in Asia, a pump into a trend for a continuation back through, trapping traders in the wrong direction, chasing the low or the high, getting caught, and then bang, the market just bursts right through. It can be a trend trade. It can be a high of day, low of day trade. So that's the reversal, where they take traders into the extreme at the beginnings of the equity session, trapping them in the wrong direction, hitting stops, triggering breakouts. It can be a scalp with a trailer. So as I mentioned to one trader, the burst itself is often a fantastic way to capture profits right off the bat, 50, 60 pips, because I always preset my profit targets. And what that allows me to do is to be taken out on that explosive move, leaving a trailer in the market for them to pull back into the original trade, and then if there's a continuation, to capture more cream out of that trade. Now that's whatever tactics you decide how you want to trade, and each individual trade will require a different set of tactics, because some are just going to be purely a session scalp. Some of them are going to be the beginnings of larger moves or part of a larger move. So again, there's an opportunity to grab the money right away and lock it in, and then leave a trailer in to capture more out of that trade. Now, I've spoken to lots of traders who they get into these moves, they get stopped out at break even. And as I keep saying, lock in the money. Lock in the money. It's not about pips, it's about profits. So timings are the biggest key to the whole trade. So again, it can be a dump and pump. This will often coincide so that first hour will often create a peak formation. And that peak formation is the beginning of the dump or the pump. So often you'll have three levels of rise or fall. Depends on the market. That will coincide to be three pushes. It can be inside of a 25 pip range. But as I've reiterated over and over, I am always looking for a 75 pip high-low area. That allows the opportunity for a minimum of 50 pips on the trade. I don't want to trade if there's any major news on the schedule. So sometimes, for example, we had the pound this week, the euro this week had major news, red news, during their sessions. So I will often look at something that's neutral or ignored, oil, gold, yen, whatever, something that's just maybe set up and it has nothing to stop it from behaving in the normal pump and dump manner. Sometimes when there's news on the schedule, it will just do as it normally does. But if there's news on the schedule, it just allows for me to not think that I'm going to get manipulated or whipsawed, or they, again, moves 25 and just jams into a range, as opposed to just taking that burst from one extreme to the other. being in, being out, locking in the money. And again, as I mentioned, it can be a move to a high or low of the day, a stop hunt, triggering breakouts, etc. But again, I just emphasize this over and over and over. It is about timings, the time of day. Now, the next thing is, I've a lot of traders see it, but they just can't execute. And that's something that you have to work on. Only you can fix that. There's nothing that can be changed around that other than you gaining your confidence. And just the problem is that you're in the retail mindset. You've been hammered so many times. You get in, you get stopped out, you get in too early. So what a great question yesterday. A trader said to me, like, how do you avoid getting in too early or getting in too late? Okay. Great question, except go back. The most important thing, it's not about staring at little candle prices. I have levels before the market starts. We have number levels already there. There's the high, there's the low. It's going to be around, it's always around numbers. So I know the number level that I'm focusing on before the trade even happens. You've got an hour. It takes an hour to set it up, 30 to 45 minutes. You keep hearing me say this, 30 to 45 minutes. 30 to 45 minutes. Now, every single trade, no matter where you get in, no matter where you're trading, no matter how you're trading, I don't care who's the trader, who the guru is. Like one guy said, well, why don't you do one live? See, here's the thing. It's not about entertainment. It's not about trying to impress anybody or prove anything. It's for the real traders want to be able to execute for their own trading account. If you want to watch somebody trade live, there are hundreds of live YouTube channels. And let me guess, there's a reason why you've probably already gone and watched them, but if you're watching them live, they're probably not making any money. Now here's the key. There's an entry, a stop, and a profit target. I don't care what type of trading system you're using. That's the only three things you need to do. That is the only three things you need to do. Once that clicks, no matter what time frame you're trading on, no matter where you're getting in the middle, at the high, at the low, on the outside, the inside, on the weekend, during the week, there's an entry, a stop, and a profit target. So that's it. The rest is in your head. The rest is all in your head. Everything that's happened and what you believe about the markets is all in your own head. So you have to retrain yourself around execution. Hit the trade. Entry, stop, profit target. Entry, stop, profit target. That's it. That's all there is to it. Now, often that first hour, read this. For the guys who are emailing me and badgering me and trolling me and everything else, read this. 30 to 45 minutes in that first hour will set up the trade. Sometimes it'll be 30 to 45 minutes starting just prior to the first hour and completing in the first hour. Do you think they're going to just, here's what we're going to do today, traders, right at this time, same time every single day? Well, pretty much they do, except that you have to use a little bit of skill, a little bit of thinking, and then you have to execute. But 30 to 45 minutes sets it up. Now think about that. 30 to 45 minutes. That's 3 15-minute bars. What does that equal normally? 1, 2, 3. Now, great question. I talked about the day count. The day count, it's the same thing. Day 1, day 2, day 3 over a larger time frame. It's the same sort of pattern. So let's take a look at the charts. We have had some massive storms here in Perth this week, and in the process of moving, some have already flown out, and we're just wrapping up some things. I'll probably be here a few more weeks, but I really appreciate a lot of messages and emails wishing me well. I really appreciate that. Looking forward to North America, and although we've been back and forth a lot, this move will probably be permanent. Sad to leave. Been in Perth 24 years, but just... time to move on to other opportunities. So looking at the charts, it doesn't matter what instrument, but often, for example, sometimes if you're trading the yen in London, you might not get the same effect as you will trading the pound, because when when London opens, the pound may explode, or pound crosses may explode. It's still the one currency that is fixed around the opening of the London session that still has, when they went to the euro, a lot of the currencies changed slightly, but we'll often see in at least one of those sessions, every single pair during the week offers a great trade. So looking at oil, this is the 1 minute chart. We can zoom in. Asia, I don't often ever look at oil in Asia. Partly it's just, it's thinner, it's quieter, but there can be some great trades in Asia. Day 3, for example, when they'll blow the trade off in the direction of the trend, there can be an opportunity to capture some fantastic moves right through the previous day's high or low in the beginning or just prior to the beginning of the Asian session in the rollover time. But just coming back to pump and dump, this is the middle hour. This is the London hour, just this box itself. So coming back to numbers, just timing and numbers. Here's our 50 pip box. I'm just scrolling through, and you can go and do your own homework. Again, it's all about, I don't know what they're going to do, but I have a thesis and I'm looking for the pairs that potentially are set up the best. And I'm not looking through, 10 exotics. I have a really simple plan. I look at the majors, yen crosses, oil, gold, S&P, and NASDAQ. And often with S&P, NASDAQ, I specifically just focus around the U.S. session and sometimes into just the first hour before the market opens. There's some great trades. But oil obviously moves 9:30 New York, but it moves in London. And again, here we go. There's the beginning of a move. This move up, that pump. There's the low of the day. So if I think the market's going down, obviously we're looking for the pump to be up. It's not rocket science. There's our lower highs in the gap. This, as London or as Asia comes down and makes lower highs, this is the new high of the day. Okay, now I know traders email me all the time, but how can that be the high of the day? The high of the day is up here. Okay, well, for the beginning of this session, as it makes new lows, new lower highs, that is the new lower high of Asia. That's it. If it's going to go long, they're going to give us a short squeeze, which means it's going to be a dump and pump. So I'm just thinking simple. I want to see people counter trend this. They pump it. London opens. Okay? Major round numbers. Where do we want to get filled? Inside the peak formations. Major round numbers. If we can't get that, if it pulls away too fast, where do I want to get filled? I want to get filled into the pop-up, into the major round numbers, inside of the peak. There's our pins. As this is rolling over, again, I'm focused on price. Once the thesis is there that we're going down, okay, this is the London hour. The market's open now. Once London is open, I am focused on price. Follow the bars up. 1, 2, 3. As soon as they come down, I'm going to short it. I'm going to put a stop in. I'm going to put a target in. It's as simple as that. That's it. That's the trade. Now, traders have asked, but you often will see a bigger move follow through, or you'll see this trade coming back. You can trade those. That's if you have a trade set up to trade in there, go ahead and trade it. There's nothing wrong with that. I'm talking specifically about the dump and pump or the pump and dump. So it's about time of day. Time of day, time of day, time of day. So we come back, there's our low. We get into the middle hour. What do we see? Boom, boom, boom. It's the pin. There's our pin up into major round numbers. There's our high of the day from London. They pull away. We have two opportunities. We can get filled inside of the peak at the numbers, 75. Again, a great question from a trader. How do you know where to set your profit targets on these trades? On these moves, you'll notice, as I said, 3 levels. 75 pip box gives me a 50 pip high-low target. If I have numbers at the low of the day, pins, or highs, if I'm going back in the London trade, okay, this is a blow-off move with the trend. This is in a trading range. When we see pins and they've already put a low in place in that beginning of that move, I will target the level plus the spread. And what that allows is that if they just pin to it, as they did in this case, and they came right back, it will take me out. But you'll notice that the numbers are there. So often with this particular move, you can still target 50 pips because the pins are below the numbers. But as soon as it comes down through here, I'll be making sure if it was getting closer to a profit target and there's pins here, the first thing, I always draw my line. I will give it 3 pushes. If it doesn't take me out, I'll close the trade. Because as I keep saying, lock in the money. Lock it in. It's not about pips. It's about locking in the profits. You can scale this up. Why? Because it happens over and over again. Go to the next day. There's Asia. What do we see? This is just the middle hour. Bang, bang, bang. There's your M. There's your engulfment. That's all I'm looking for. There's nothing complicated. It's the time of day. There's your stop. And in this particular case, again, numbers. So I'll take the money. I'll just take the money. If it follows through and there's a trailer left, like the trailer's at break even, I'll take 3/4, 2/3, whatever the trade entails in terms of sizing. The bulk of the trade comes off right away on this burst. Boom, done. And then the trailer is at break even or trailing with a profit locked in, whatever. As soon as this falls through, the original profit target would be locked in. So regardless, it still comes back and takes me out where the original profit target was. We can look at gold. The key is which direction do they go? So gold auctions which way? Down to go up. Look at this pattern right here. This is all you need to look at. Everything else is in your head. All the other manipulation and zigzagging and everything else, are they going down? I'm going long. If they go up, I'm going short. They go up, we short it. This is a great example. If you shorted gold, 1 push, 2 push, 3 pushes, I'm cutting the trade. In the US session, what do we get? You're in the trade, bang, it goes vertical. It's that simple. V, A top. They go up, I'm going down. It's as simple as that. If we get pushes, cut the trade. If they give me a second entry, take it again. That's all. That's all. Again, entry, stop, profit target. They don't get down to the numbers. It goes sideways. I cut it. That's it. Close the trade. They give me a second entry. We get the engulfment on the high bull candle. We're at numbers. We got people trapped counter trending. There's the trap. Remember, go back. We talk about this. Whenever you see price action suspended above or below numbers, that's a dead giveaway. They're coming back. They're trapping traders away from where they're going, and that you're getting longs caught up high or shorts caught down low. They're going to go through this. Entry, stop. If you want to trail, that's your choice. I like to lock it in. And as soon as I see creep, I'll be willing to just take it. I'll take the money. We're at major round numbers. We're at 50. You're done. There's a 25 pip trade. What's great about pump and dump is that it happens over and over again. They go down, we're going up. It's as simple as that. That's it. They come down, I'm going long. They go up. Again, remember, the traders are shorting this into the trend. There's an opportunity to go long, but then there's also the opportunity to go back with the trend off the numbers. After this is a stop on lower level shorts, and then a continuation of the original trend. That's it. That's all it is. London opens, bang, 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 bang. They get the lower level shorts. You can go long here. Nothing wrong with that. We got a double bottom reversal, bang, straight back up. You want to go short again? Right there. It's an entry, a stop, and a profit target. So it's all about the time of day. People are watching all this stuff going, and this is a 1 minute chart, but the reason why it's a 1 minute chart is because this particular trade setup is based around the open of the session. It's as simple as that. That's it. So hopefully that makes sense, traders. It doesn't matter what instrument you look at. We could look at the yen, and this is last night's U.S. session. There's our low. 1 push, 2 push, 3 pushes. Trend is down. We got our numbers. High engulfment of the high bull. Bang, we're in. Okay? It creeps down, boom, blows off. So there are opportunities, and again, obviously, another great question from a trader. How do you tie that in with your overall thesis with the bigger pattern? Well, I'm always looking at the days of the week, the setup. As I said, I want 90-10. I don't want 50-50. Trading stuff in here is, okay, it's a trend trade, or you're trying to sell the high or buy the low. I'm just coming at a very specific time looking for setups. That's it. There are bigger high of day, low of day trade setups. There are days of the week, so we could have a day 2 short on a breakout market. We had day 1, day 2, day 3 reversals on Thursday this week. Some massive moves. But the pump and dump itself is a fantastic bread and butter trade opportunity for taking money out every single session and just walking away, or then positioning yourself in the bigger trade setup opportunity if it is indeed there. So again, thanks for a ton of great questions. Hopefully you got value from today's video. Traders, the time of day, 30 to 45 minutes, entry, stop loss, profit target. Keep it simple. Have a great weekend, and may the markets go with you.